Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Kinahan, Chief Market Strategist with TD Ameritrade, to discuss February's reading for the Investor Movement Index. The IMX is TD Ameritrade's proprietary behavior-based index, aggregating Main Street investor positions and activity to measure what investors were actually doing and how they are positioned in the market. JJ, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill. Always appreciate having me on here.
All right. And for February, it's no surprise to see that we saw a downtick in the IMX.
Yeah, it's the trend you and I have been talking about now for the last 3 months. And that is every single month over month, a little bit less exposure to the market. We didn't fully see the whole Russian-Ukraine situation taken in this report, but it's something we're continuing to see. If I had to sum it up in a few words, I would say more low beta stocks that are much more close to the Dow Jones or S&P 500, and not as many of those, if you will, high flyers. Certainly, people seem to be avoiding them more than ever. A big difference from what we saw even 6 months ago, where all these were met with, "Hey, it's a buying opportunity across the board," and particularly those who again have a chance to have a huge move to the upside or high flyers.
Yeah, certainly no meme stocks or fintech stocks or some of the newer economy stocks in that mixed bag. In fact, the buy side and the sell side, we saw, mixed sectors again.
Yeah, it is interesting. Apple and Microsoft leading the way. You and I have talked about this before, Jill. Those are the two stocks that whenever there's been uncertainty over the last 2 years is where our clients tended to start in terms of buying. What's interesting is we usually saw that spread from there. We didn't really see the spread in terms of, again, outside the lower beta stocks. So you did see Pfizer, which may be a little bit surprising as we hit the tail end of Omicron. That one was a little bit surprising to me overall. And then a couple of technology stocks in NVIDIA, which, as you know, has been a favorite of our clients over the last year. And then AMD, a name that might be, again, a little bit surprising. We started to see it pop up a little bit more over the last couple of months. And in the chip sector in general continues to be interesting to our clients, especially now as we try and sort through where we go next coming out of these not complete shortages, but are we going to go into shortages once more?
Right. And you know what? The same thing with the sales as well. It wasn't surprising to see a mixed bag. I mean, ExxonMobil, for example, to take profits in the energy names was not a surprise to me.
No, it was not a surprise to me. Now, again, we've had a big jump in crude oil since then, but these are people that, a year ago when you and I were talking, people would be buying ExxonMobil and be like, boy, what are they seeing here besides a great yield? Well, they've been rewarded for buying that stock with a very good yield with Exxon, Chevron, et cetera. A couple of the other ones being Boeing, again, one that's been a favorite of our clients. They see a little bit of uncertainty there. GE, as I think it may be running out of a little steam compared to where it was last year. The one I thought was really interesting, though, Jill, was Carnival Cruise Lines. And, I would really want to keep my eye on the travel sector going forward, so to speak. Is this people just taking profits? You see Carnival, you see Boeing together. Is this just taking profits? Or I think many companies are talking about a huge travel season upcoming. We saw that actually out of Uber this morning. Is this going to be the great travel season many expect, or is this going to be perhaps a little bit disappointing as more money coming out of people's pocketbooks for things like gasoline and if they have to rent cars now, et cetera?
You know what, JJ, I'm glad that you brought Uber up because I saw the same segment as you did. And of course, what's happening in Europe with Russia and Ukraine, because gas is so expensive, it makes you wonder, are people going to put car purchases on hold? And if they do need to travel, because we don't have to go into work every day like we used to, maybe a day or two here during the week, instead of commuting and using your own gas, perhaps Uber and carpooling will really be the way to go. And, it's also interesting with the travel sector. I feel like every time it starts to get some steam, Omicron hits. And then we have what's happening with geopolitics also hits. So it's almost like it starts in fits and starts, if you will, of the travel sector.
Absolutely. And the other thing you wonder is, you and I are both lucky enough to live in or near bigger cities. And public transportation has really been a problem in terms of they're just not getting people back as fast as they would like. Will this be something to help jumpstart that, which in many ways will help cities recover from where they've been before if you have more people on public transportation? But, taking it to a larger set in terms of some of the travel stocks themselves, what I'm interested to see is, do the hotel reservations that have been made already for the summer hold up? We'll see CPI this week in terms of how much is coming out of people's pocketbooks. Will people downscale their plans, if you will, because it's going to take such a big part of their budget?
Yeah, a great barometer for us at Nasdaq is, our studio, we overlook Times Square. And that's how we were able to gauge what it looked like going into COVID, coming out of COVID, what it looked like September, October, November this year. And then, of course, December, we went back into somewhat of a lockdown mode. But JJ, bigger picture here. And of course, we're thinking of the humanitarian toll that Russia and Ukraine is taking. But from a trading perspective, at least in the last 10 years, when we've seen an explosion of apps come online and retail investors really participate in the markets, they have, COVID provided some volatility, but this could potentially be prolonged volatility, interest rates, inflation, the cost of gas could be prolonged higher. There's a number of investors out there who have not really traded through this kind of environment.
Yeah, Jill, normally we would see explosion of trading in this kind of environment. We're still seeing very steady trading, but we haven't experienced the explosion. I think part of it is because the intraday moves have been so violent that that's caught up people. The other thing is, as you're mentioning, some of the commodities, we see maybe people run the corn, wheat, crude oil during these types of situations. Well, corn and wheat have been up limit so many days in a row. I think that may have scared some people off. Crude oil, when you see an overnight move like last night when we hit 131, now as you and I are talking, it's trading about 120. These are moves that most people aren't ready for and kind of unprecedented. So then, again, you look around and it's like, okay, people are going to the names they know, which is smart. Low beta names, I think that really makes sense, but much more selective in their investments than they've been. And that normal crowd that's rushing into volatility, I think, is doing so more selectively perhaps than they've done in the past, because one of the plays, as you know, Jill, was sell that VIX when it got above 30, 32, and it seemed to pay off in a pretty quick time. As you just said, we don't know how long this is going to stay. We don't know where it can go to because the situation is so fluid.
All right, JJ, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.